on the stage. Edgar's going to introduce his team, and he's going to host a panel for you guys on tax loopholes and business planning for your taxes. Ladies and gentlemen, would you like to keep more money in your pocket? Fucking Uncle Sam, right? He's the worst uncle in the world. He's the only uncle that keeps asking for money. So we're gonna try and hook you guys up today. And for the next 15 minutes, these guys are gonna give you some tax-saving tips to help you keep more money in your pocket this next year. You guys go with that, yes?
Check.
All right, let's go.
Thank you, Dave. Thank you. Appreciate it. I got this. All right. Appreciate it. Good afternoon, everybody. Welcome back. Welcome back. You know, you guys, a lot of you guys are trickling in from lunch. My job is to get through this tax talk before the brownies hit. How was that brownie? The brownie was pretty good, right? The brownie was pretty good. I got to get that before the carbs hit. Guys, my name is Edgar Paredes. I'm one of the managing partners at Tax Team Financial. We're a financial services company.
Mike, guys, please give him the respect. Settle down. Thank you.
Thanks, Rudy. Appreciate it, man. By the way, before I even get started, Rudy, Dave, thank you so much for putting this together. I really appreciate it. Appreciate the opportunity. Big round of applause to New You Real Estate Conference. A pleasure being here. As I was saying, my name is Edgar Paredes. I'm one of the managing partners at Tax Team Financial. We're a financial services company. We work with individuals and businesses, and we do a ton of things. Credit counseling being one of them. How many of you guys have had credit issues with some of your clients? They don't qualify. It's a lot of what we do. We do accounting as well. How many of you guys have, a little lower, how many of you guys have needed accountant's letters or maybe a P&L or a balance sheet for your clients? It's a lot of what we do as well. We do business management for celebrities and athletes. And my favorite thing is strategic planning and tax planning for all sorts of people, especially people that are making a lot of money. These last 2 years, a lot of people blew up. A lot of you guys did very, very well. And I heard a lot of you guys laughing when Tom said, you guys don't pay taxes anyway. So we're here to teach you and show you a few ways that you can save a bunch of money. And in order to do that, I'm gonna introduce my team. I brought a couple of my crew. I'm gonna start with Alfredo Darna, Al Darna. He's our senior relationship manager. He's also known as El Tax Papi. He's for the single ladies, El Tax Papi, Alfredo Darna. Al, how long have you been with us?
Is this working? It's on? Hi.
It's on.
Well, thanks for the introduction. This is my 6th season coming up. 6
seasons being a tax preparer. He's one of the best. The next up is going to be Erik Lora. He's our senior business manager, head of the NFL and sports division at AMG Business Management. He deals with a lot of NFL athletes. We're going to put him on the spot as well. And then last but not least, Michael Darna. He's the COO of Tax Team. He is, for those of you who are realtors during the day and OnlyFans influencers at night, he is the tax guru for influencers. So we're gonna put him on the spot with something like that. So I'll tell you guys what we're gonna do. It's gonna be a lot of fun. I'm gonna give 3 scenarios to these guys. I'm gonna catch them off guard a little bit, and I'm gonna show you guys what we do and how we do it. Basically, how we tax plan in different circumstances when it comes to our clients. We're gonna use different tax loopholes to see people's tax bills, tax liability go from a lot to a lot less, okay? So I'm gonna start with Al. Al, I'm gonna give you something that's probably familiar with a lot of people here. A realtor is making about $150,000. We all make money 1099, right? So as you guys know, you haven't paid any taxes on this money. We're gonna assume this realtor is single with no kids.
Okay.
What are some of the tax loopholes and strategies that you would use in this scenario?
Well, I mean, for me, it's pretty fundamental. The first thing I would ask would be, are you being paid to your Social Security number, or have you already incorporated? So it's very simple. If you haven't incorporated already, you need to do that ASAP, especially with the end of the year fast approaching and tax filing coming up now in Q1 of 2023. It's absolutely crucial that you get incorporated, because the tax savings advantage that's going to represent for you, I can't emphasize it enough. So you mentioned 150,000.
150,000, yeah.
Okay. So if you're taking that tax hit to you personally on your social, you're looking at federal, Social Security, Medicaid, you're looking at all 3 tax buckets. So you're somewhere in the range of 33 to 34%.
Yeah.
So, do the math, and it's pretty substantial. You're north of 30K pretty easily.
That sounds fun.
Yeah.
Wait, can I jump in as the common
Please,
folk?
please do.
So you mentioned getting incorporated.
Yes, sir.
Specifically Inc. or LLC, does it matter?
Great point.
It really doesn't matter. Obviously, in this realm that you guys work in, you like to set up what's called professional associations or PAs. You probably should do that as an Inc. Just because the structure of the law is going to be more flexible when it comes to doing that. I also know realtors that have set up LLCs, and they could still work that way. It just takes a couple of simple conversions to make that happen, but preferably Inc. to answer your question.
And you mentioned something that's very critical, which is the timing of this thing. It's November already, so we have 2 months before the year ends. What happens if it's January 1st already? Is it too late?
Yes, absolutely. If it's January 1st, it's already too late because the year has ended. Those 1099s are going to be issued to your Social Security number. The money's been all paid out to you directly. There's no way to actually rectify that. So that's why it's crucial that you do that now if you haven't already, so that we can get ahead of the game and be prepared and planned for 2023.
Fantastic. And last, and then I'll let you be a little bit. You mentioned 30-35%. Once somebody incorporates, what kind of tax bracket are they looking at? It's a lot lower, I'm imagining.
Great question, and I definitely didn't want to drop the microphone without mentioning what that looks like. So I mentioned earlier that when you're paying taxes through your Social Security, you're paying federal, you're paying social, Medicaid. When you incorporate to become an S corporation, you automatically shave 15.3% as far as taxes are concerned, because you're not liable for self-employment tax, which is Social Security and Medicaid. You're just paying federal. So right there, you're looking at almost half of the tax bill coming right off. So that's why I can't emphasize enough that it's important that you do this as soon as possible if you haven't done so already.
So I'm not an agent, but I got a question. Julie's my friend broker over there. Julie, can you pay agents through their company? Okay, just a common question. Sorry, I didn't know.
No, it's fantastic, and thank you, Al. I appreciate
Absolutely.
it. Just like what we needed right after lunch, right? Talking about percentages and that, but I think shaving half of your tax bill is something that I think a lot of us would appreciate. I'm going to shift a little bit more from a personal standpoint for you guys. I want to, Tom said to steal lines and to model after other people. I want to model him a little bit and invite the lion in each one of you guys to listen for this opportunity, because the next 2 scenarios is going to be for potential clients of you guys, right? I'm going to pick on Erik next. Erik deals with a lot of professional athletes and high income earners on W-2s, right? So Erik, your scenario is as follows. It's an NFL player. He makes about $2 million on a W-2. He's single, no kids. He's got no endorsements, no 1099 income. He already prepays a bunch of taxes. How do you tax plan for somebody like this?
Great question, Edgar. Hello, everyone. Good afternoon. W-2 employees are much trickier to go ahead and tax plan for. Some of the low-hanging fruit that I think you guys should really take away from this is moving away from the standard deduction and getting your paperwork together and itemizing deductions. That will automatically bring your standard deduction from $12,500 to a much larger number. The next one is maxing out retirement contributions. This includes 401ks, this includes IRAs, and if you listen to my buddy Al over here, if you open a business, you can get a SEP IRA, which is a self-employed plan, and basically fund your retirement for up to $61,000, right? And so those are very, very nice tax breaks that you get just from low-hanging fruit. And then in America, this is a capitalistic society, right? And so opening a for-profit business is the next best strategy. If you're making $2 million on W-2, your tax rate is about 37%. You're paying $700,000 up front. So use some of that W-2 income, fund a for-profit business, and find other ways to utilize the IRS code and get greater deductions.
What are some of the things that you could do by owning a business that could help you with taxes?
Yeah, so kind of alluding to what Al said, avoiding self-employment tax is a huge piece of what we do with our clients. But running payroll, paying people that are your supporting staff, that you're not zelling them, but you're actually running payroll through your company, you're allowed to write off half of that self-employment tax on your business side, so you're lowering your business income. So there is a lot of strategies once you open up that business and kind of dive into it. But buying assets and using depreciation as your friend is going to be a fantastic thing moving forward.
And I'm glad you said that last, because I invited you guys to look for opportunities. And the truth is, a lot of us sell property for the 5 Ds that Tom mentioned earlier: divorce, death, diamond. But there is another D that wasn't there, and it's depreciation. A lot of our clients, a lot of our luxury clients, which we're looking for a lot of them, need the depreciation in their taxes in order to lower their tax liability. And opening a business and buying under that what's the section in the IRS code?
Section 179.
Section 179. This is why I like hanging out with these guys. Section 179, it's a fantastic way for you guys to talk to your clients and saying, hey, there's tax benefits to you purchasing this investment property and lowering your tax liability. Thank you, Eric. I appreciate it. Last but not least, I promised them it would be an influencer, so I'm going to go with an influencer. We have a few of these. I want to imagine an OnlyFans girl. She's making about 100 grand a month. It's all 1099, so 1.2 million. I see one over there. I see somebody's pointing at someone over there. But pay attention. This one's going to be really cool. She makes $1.2 million a year, 1099. She's got no kids. She's unmarried. How would you tax plan for her?
All right, guys. So first and foremost, thank you again to New World Title and Rudy for having us today. Fantastic event so far.
Our pleasure, man.
Appreciate you guys. So first and foremost, we see this very common. I guess I'm the influencer guy. I've been labeled that.
He really is.
I would say 8 out of 10, when they come in, they give me their 1099, and I look down and I instantly cringe because they just got paid $1.2 million to their Social Security. And we all know that liability there is going to be well over $300,000 just for being structured incorrectly. That's a big no-no. So we need to make sure that just for real estate, just like you guys all here, we need to be incorporated. For realtors, we mentioned a PA was the way to go. For the influencers, I definitely recommend an S corporation where you're taxed at a 21% rate on your profits. So just by simply being structured correctly, you are saving a fortune before we even go into your expenses. You got your photo shoots, you got to look the part, you got to travel. Some of those may be covered most of the time, but hey, as I'm ramping up, I do have expenses. Those definitely do count. Erik over here mentioned something that's very, very important, and that's payroll, right? So I'm going to be an employee of my own company. That is vital because throughout the year, I am paying federal taxes, right? So look at that as a bonus. At the end of the day, when we look at your liability and say, okay, this is your number. Oh, wait, you're on W-2, you paid some federal taxes. Well, guess what? That number is now coming off your liability, and your balance is now X. So that is a huge, huge savings. Now, the biggest that is very popular now, I know there's a lot of people that love this car, in particular the G-Wagon. I haven't
That's
checked
how he gets all the influencers. He tells them they could buy G-Wagons.
I haven't checked the list recently, but I know there was a waiting list for it, so there are other vehicles as far as a couple of Audis, a BMW X6, X5, that if treated as a business vehicle, you can depreciate the whole value of that purchase on your taxes. Okay, I'm gonna say that again. For a vehicle over 6,000 pounds, you can depreciate the asset as long as you use it for at least 50% of the business activity. And that is huge, guys.
Well,
huge.
just
So
to
that means
clarify.
everyone should go get G-Wagons.
If it's available.
You're writing
Might
it off,
wait
right?
a little bit, but next time Hot Girl Summer rolls around, it just might.
Just to clarify, though, if she made 1.2 million, she buys a G-Wagon for $250,000.
Yep.
What does that really mean exactly?
So instantly, the purchase price, 100% coming off of the liability, right?
Sign me up. Where's the
sign
waiting
you up.
list?
G-Wagon for Rudy right away.
We'll talk offline after the event.
Thank you,
yes,
Mike.
and that's huge. And again, that tax bill that once looked like $300,000, man, depending on what you're trying to accomplish that year, could be well under 100,000, maybe even 50. So definitely got to keep track of expenses and know exactly what strategies there are. So before the year ends, guys, make sure to reach out to your accountants. We're here. If you need one, give us a call. Tax team out of Miami Bird Road. Thank you guys.
Thank you, Mike. That was fantastic.
you.
We don't have a long time left. I'll leave you guys with 3 things. Incorporate, especially before the year ends, for you and your clients. Do your books. You guys want to be serious. I heard Tom talking about money. Get your money right. Understand what comes in and what comes out. Budget yourself, especially brokers. If you have your own business, I think that's huge. And then depreciation. Understanding how depreciation of assets works and how it can help you lower your tax bill, I think is huge. I got 20 seconds left. I want to thank my 2 business partners.
Yeah, I was gonna do that.
Any closing
All right,
remarks?
so there's 2 business partners of his that are behind the scenes and really, really shy, apparently.
Rudy,
They didn't want
I
to get on
think they're
stage.
high.
But I think we need to give him a round of applause to Carlos. Stand up. Stand up.
Stand up, baby. Stand
And
up.
Eileen. Thank you, guys.
Thank you, Rudy. I appreciate everybody. Have a great rest of the conference, man. Thank you, guys.
Thank you, guys.